SpaceX, the biggest IPO in history, with $85.7 billion raised in June alone, is now trading roughly 20% below its own IPO price. So everyone who's bought the most hyped listing of the decade is underwater. It's because SpaceX stopped behaving like a rocket company, and Wall Street hasn't decided what to call it yet. SpaceX went public in June at $135 a share. It hit $225 within days, peak euphoria. Then it slid all summer, and on August 4th, it reported its first quarter as a public company. The headline numbers were good. Revenue, $7.81 billion, up 92% year over year, and $1 billion ahead of consensus. Adjusted EBITDA nearly tripled to $3.5 billion. Starlink alone did $4.29 billion, up 66%, and crossed 12 million subscribers, double last year, including me. By every normal measure, it's a great quarter, but stock dropped anyway. Because of one line, capital expenditure, $18.4 billion, analysts expected 13. Annualize it, and you get $73.5 billion run rate against $48.7 billion consensus. Read that again. This company spent roughly 2.5 times its quarterly revenue on capex in a single quarter, and $15.8 billion of it went to one thing, AI. Because SpaceX has an AI division now, it did $2.6 billion in revenue last quarter, up 247%. It also signed $14.1 billion of new cloud contracts in 3 months. Well, how does this all add up? Elon wants to put data centers in orbit, not metaphorically, satellites full of NVIDIA chip. The first one will be called Starmine AI-1 and must say, well, it will launch next year. In January, SpaceX filed with the FCC to operate up to 1 million of these satellites. For scale, the Starlink satellites today in orbit, it's around 9,600. Yeah, that's a big number. Elon Musk claims the AI compute capital pays back in under a year. If that's true, spending $15.8 billion a quarter isn't reckless. It's, well, correct. And well, every quarter you don't is a quarter that a competitor does. Meaning, this is a huge bet. And if it pays off, well, it pays off. There's apparently reported deals to rent compute to Google and Anthropic, which is another $6.7 billion of cloud revenue contracted in just the first week of this quarter. On August 6th, SpaceX's first lockup expired. Roughly 912 million insider shares, about $101 billion, became sellable. Tradable float went roughly from 639 million shares to as many as 1.55 billion. Overnight, more than twice as much stock could hit the market. A further 455 million shares stayed locked specifically because the stock is below its IPO price. That trigger was written into the lockup in advance. When a company spends multiple of its revenues on infrastructure, it's telling you what it thinks it's becoming. Now, whether Elon Musk's bet pays off, or orbital data centers are the future, or the most expensive science project ever attempted becomes true, nobody knows yet. What we do know is that a rocket company, SpaceX, just spent more on AI in one quarter than most countries spend on anything. I'll be keeping a close eye on how this goes, and well, let's see SpaceX next quarter. It should be pretty interesting. This has been the Market Report, and I'll see you on the next one.